Welcome to step 2, servicing versus security. So you've already had a look at your balance sheet. We chatted about why it's really important to have a good, strong balance sheet, and you've nutted out what you can put down on your own balance sheet. So now we need to look at the two most important parts of an application, the servicing and the security. So if we look at servicing first, the bank have a duty of care and an obligation to make sure that you can afford your mortgage repayments. So what you have worked out on your balance sheet as far as money left over that could be used for servicing isn't 100% what would be used for servicing. So some things that need to come out of there still are a buffer to allow for any interest rate rises and things like that. A small buffer to allow for if you have no work for a week or something like that, or you're between employment, so you don't have a job for a week or two, and also what we call your monthly living expenses. So your monthly living expenses are all your outgoings as far as bills, entertainment, things like that that need to come out. So this time your homework is to have a brainstorm and start jotting down what your own monthly living expense is. You will need this, and your lender will actually ask for it written down from you in your handwriting, because it's not something that I can write for you, it's not something I can guess, it's not something someone else can guess for you. So two things happen with this monthly living expense. Either it's higher than the average person in your situation, in which case we take your monthly living expense, or it's lower. And if it's lower, we take the average. And again, this is to cover you. So once you've got your servicing, we then know roughly how much you can use towards your mortgage repayments, and we can then work out how much you can look to borrow. There are some calculators as well, so if you aren't too fussed on doing the maths, then talk to your broker and they can do some quick calculations for you. So then you need to make sure that you've got a security. Usually it's cash, so we need some cash from somewhere. Ideally, in a perfect world, you would have a 20% deposit. So this means that you've got 20% of whatever the purchase price is, and that's your cash deposit plus any legals and stamp duty, if you're going to be paying stamp duty. So most people don't have 20%. That's a lot of money. And that's partly the reason why it's so hard for first home buyers to crack into the market. So instead of using a 5% deposit, in some cases you can borrow up to 95% of the purchase price and then pay lender's mortgage insurance on top of that. So lender's mortgage insurance is an insurance policy that protects the bank should you default on the loan, but it's a premium that you pay, and that premium gets added to the loan at funding. And depending on the lender, some cases you need to pay the premium up front. So that is another way that you can break into the market. Another way is having a guarantor. So lenders only offer security guarantors. So if you can't pass servicing on your own, unfortunately, you cannot have a servicing guarantor, but you can have a security guarantor. And this is someone who owns their property outright, preferably a parent who owns their property outright and can say, look, you can take a portion of the property price or portion of our property and use it as security for the next one. And the way we structure that is into two separate loans, just to protect the guarantor as well. So that's another option. And finally, a third option is to look at property share. So this is where you and a close family member or friend purchase the same property, but you have your separate loans. And the separate loans are to protect you yourself and the other person. But in effect, it means that you only really need to come up with half the purchase price, so half the deposit and half the legals, half the stamp duty. So it is another option. It's a niche market. You need to really trust the person you're purchasing with, but it's definitely an option. So once you've worked out where your security is coming from, are you going to have to save it? Have you got a family member or friend that you want to purchase with, or have you got a parent or a family member who can use their property as security for you? You've worked out how much security you've got, then you can look at putting the application together. So stay tuned for tomorrow, because we're going to be talking about the paperwork, what you need to get prepared, how you can get prepared so that your broker will not need to ask you for one single thing.